Buy when there's coronavirus in the streets? Hello and welcome to today's Daily Blitz. Now, Nikolai Hubble is not in today, so it is just me, but I'd like to talk a little bit about the coronavirus. So as I'm sure you've seen, it has taken off across the markets and in the financial press. All of the top read stories in the FT yesterday were about the coronavirus, and today it's either about the coronavirus or about the stock market correction that occurred yesterday that is being attributed to the coronavirus. The CNN Fear and Greed Index, which measures a variety of both market and economic indicators, is saying that investors are feeling extreme fear right now. And if you take a look at the volatility markets, you can certainly see that there is something very major going on. So on the screen here, this is the volatility market, this is the options market, the insurance market effectively, for the price of oil, gold, the S&P, the Nasdaq, and the European stock market. And as you can see, since the beginning of the year, they are now on a massive rising crescendo right now. Now, nobody actually knows if any of the legendary Rothschilds of old actually ever said this, but the phrase "buy when there is blood in the streets," or any variation of that, like "when the streets of Paris are running with blood, I buy," are often attributed to the Rothschilds themselves. Now, as I say, nobody actually knows if they did say this, but there's a reason it is remembered and endlessly repeated by investors, simply because it's a contrarian indicator. When things are looking absolutely awful, it's often a great time to buy because prices are reflecting ever more awfulness in the future. So, it does beg the question, is the coronavirus really just a massive buying opportunity for investors? Now, only time will tell if the wisdom of the Rothschilds is indeed relevant to the coronavirus case, but personally, I think it is. I think well before this year is over, we're going to see volatility get crushed and we're going to see the stock market rise an awful lot more, because central banks are going to do whatever they can to keep this show on the road, and that means more interest rate cuts, more quantitative easing, and any other plan that they can come up with to try and maintain the price of assets. But whether or not I'm right about this is something else entirely, of course. Only time will tell, and we will be telling you about that more in the Daily Blitzes to come. But thank you very much for watching. That sums up today's Daily Blitz. Be sure to subscribe and click the notification bell down below, and we'll see you in the next one.